We're going through a mortgage crisis right now in the UK. Lots of landlords are having to either sell or to remortgage or to find some sort of way of being able to make sure that they don't default on their mortgage payments. Today I want to discuss with you specific topics and mistakes actually that landlords make when they're trying to go for a remortgage. I want to ensure that landlords do not get their mortgage declined. So these are some tips I can give you to ensure you don't make any of those mistakes. Let's go. Increased debt. You have to make sure that at least 3 months before you apply to get a remortgage, you do not take on any more debt, because excess debt, the mortgage providers will assume that you probably can't afford the new mortgage payments, especially with the interest rates going sky high. They'll see that you've got extra debts taken on, so therefore you may not be able to afford the new mortgage. Missed payments. Have you defaulted on any payments for your current mortgage that you have, your buy-to-let mortgages, your credit cards, overdrafts? Those will show up negatively on your credit report, and if they show up negatively in your credit report, that will ensure, or you may possibly get declined with your mortgage application. They'll see that you can't be trusted pretty much as a borrower of money, so therefore they will not want to lend you any more money. When you took out your initial mortgage, buy-to-let mortgage, your credit history was probably wonderful, but now you've got a CCJ. CCJs will enable you to not access many mortgage products on the market. It's not impossible for you to be able to get a mortgage, but it'll be extremely difficult for you to be able to get a really good interest rate. And obviously with interest rates going through the roof, you don't obviously want to get a mortgage that is extremely high in terms of payments, or being able to get even a long-term mortgage. So if you have a CCJ, you have to ensure that you have either paid it off or you have a payment plan in process. So make sure that is in place, or else you may not even be able to, you may just be declined a mortgage altogether. How is your credit score since you obtained your buy-to-let? So now you're looking to remortgage. How is your credit score? Is it low? Is it high? I would suggest you check your file. There's a software online where you can check your file to find out how your current score is at the moment. The lower your credit score, the less money you'll be able to borrow. You may not necessarily look as a very good lender, therefore there'll be less products available for you to be able to obtain for your buy-to-let mortgage. Obviously the idea of whatever reason you want to get the buy-to-let equity out of your property, or even just to remortgage to get a more favorable rate, if your credit score is low and you've got really bad credit history, you won't even be able to get a very good mortgage rate, so there probably won't be any point on trying to get a remortgage anyway. So definitely make sure your credit score is a lot better than it probably is right now. If you could do anything to improve it, you have to try. Are you on the electoral roll? Now this again will have an impact on your credit score. If you're on the electoral roll, that means you are able to vote in the United Kingdom. That is where I'm based at the moment. If you are registered to vote, that makes out that you're a very good citizen in the eyes of, mortgage lenders. You pay your council tax. That looks good in the eyes of the mortgage lenders, and obviously for you to get a really good credit. So please ensure that before you apply for a remortgage, you are registered at your home address in order to vote. Has your employment history changed? When you first got your buy-to-let mortgage, things could have changed a lot since then. Were you employed? Since you've got your buy-to-let, are you now self-employed? Are you a company director? Are you working freelance? Because those three types of income generating roles will change the type of mortgage that will be available to you. If you was in a straightforward employed role, you're getting PAYE, then it'd be a lot easier for you to be able to get a buy-to-let mortgage. Buy-to-let mortgages are obviously based on the rental more than your employment or income, but ultimately mortgage lenders, especially in this current market, will be looking at your income. So if you're a director or a self-employed person, they'll want a certain amount of history in terms of, your company history, your company accounts. They'll want to look at how much money you're taking in. They may take into account dividends, or they may not take into account dividends if you're a company director, if you're self-employed. They want to just look at all of your company's financial history. Generally, they look at about 2 years to 3 years. If you're trying to get a remortgage and you've just been 1 year in business, it's not impossible, but it's going to be a bit challenging for you to get a really good rate and to get a really good fixed term. Especially if you want to get interest only, it's going to be a bit challenging for you. So definitely consult your accountant and a really good mortgage broker to be able to get the best products on the market. Now, there are lots of people who have at some point decided that they were going to use credit cards to purchase properties. I don't know personally, but I've heard of all sorts of stories of people using credit cards to buy, properties up in, the north of England, and, getting a credit card or any sort of large credit on your file before you decide to get a remortgage will have a negative impact on your ability to be able to borrow more money. The lender or the mortgage provider will see that you have to obviously pay back this large amount of money, so they're going to most likely deduct however much you've borrowed off the amount of money that they're going to lend to you. So if you've got a large amount of debt, I suggest you do not do any form of consolidation. What you do is you ideally see if you can pay off the majority of your debt before you remortgage, or if you are remortgaging to pay off debt, then ideally 3 months before you decide to get a remortgage, you do not do anything to your credit apart from keep up the repayments and see if you can pay off a little bit more of the debt, because the lenders will look at all the debt that you owe and they may take some of the money off the amount of money that are going to lend you. So just try to make sure you pay off as much debt as you can. I hope you're getting a lot of value from today's video. I'd appreciate it if you give it a thumbs up and you subscribe to the channel. I'm Tanya Day. I've been working with property professionals since 2012. I am a virtual assistant and online business manager. I work with property professionals in the back office of their business, taking care of the administration and customer service and other areas that they find suitable in their business. By working with them, I am enabling them to concentrate on money generating tasks as well as their hobbies and being with family, because they have so much extra time. I'd appreciate it if you would subscribe to this channel, because all the tips and hints I give to you is based on working with all these amazing clients and all the information that they have shared with me. So because they've all shared this information with me, I thought it would be good to pass it on and to share the information with you. So obviously if you subscribe to the channel, then this video and all the other videos in my channel will get shared out to more people in the wonderful YouTube world. So thank you very much for subscribing and continue watching. Now, one of the reasons you may be declined is because of the loan to value ratio. Now obviously you've already got a mortgage, so you're just remortgaging, so there's only so much money additionally that the mortgage lender will give you. So if they're giving you an 85% loan to value, then they obviously won't, they'll only loan you up to 85% of the value of the property. If you're trying to get more money out of your property, then I suggest you get a property valuation when a property is going to be remortgaged, and if you want to take any equity out of the property, then the mortgage lender will potentially get a valuation of the property anyway. If you're just getting a remortgage because your current product is coming to an end, then that shouldn't necessarily be a problem in terms of getting any extra money out of the property, because that's not what you're trying to do. You're just trying to get a better rate because your current mortgage is coming to an end. But if you're trying to get more money out of the property, you just have to make sure that you're not taking out more than the mortgage lender is willing to loan you. So obviously speak to a really good mortgage broker. I may put some mortgage brokers in the description below, because there's a few mortgage brokers that I have spoken with that provide a very, very good service. I won't remember them off the top of my head, but I would link them in the description below. Now, if you have been applying for lots of credit recently, then this may look negatively against your credit file. So searches come up, any type of search in terms of obtaining credit that you've tried to do recently within 3 months of applying for a remortgage will show up on your credit file. This will not look very favorably to your mortgage lenders and to people trying to loan you money, because if there's lots of searches, they will assume that you have had lots of declines on your credit file. They won't. The reason that doesn't necessarily show up as to why you applied for all these credit files. It will just show up on your credit system that you've applied for lots and lots of credit in lots of different places, however many places you've applied for. And if you have been declined, then you need to take a break and don't apply for any more credit for at least 3 months, because if you're employed specifically, then these things will show up on your credit file, and this is what the mortgage advisors or mortgage brokers will look at, and especially the mortgage lenders. There'll be less availability for you on the market in terms of all the products that are out there, because it will look like you cannot be a very good lender, a very good borrower of money if you keep getting lots and lots of credit. So just be wary of that 3 months prior to deciding to remortgage your property.